right, y'all. Well, welcome back to another episode of Dirt, Grit, and Stupid Shit, the adventures in real estate. And you know what? I said to myself, Self, let's bring on a lender that kind of knows her shit, right? So Tiffany Sicard is back with us with our season 2 here, and we want to talk about, Tiffany, introduce yourself first and tell everybody how long you've been in the business.
My name is Tiffany Sicard. I'm with A1 Mortgage Services, and I've been in the industry 25 years and 11 months, so 26 years come April.
So longer than me. Wow. You're older then, right? No, just kidding.
Oh, yeah. Absolutely.
Yeah. So, nowadays people do nothing but think about interest rates, right?
Yep.
That's what they do. And that's what I really want to talk about today. Because it seems to be everybody wants to look at the interest rate and not buy a house. It's rate. When I keep telling people, date the rate, marry the house. Is that right?
Absolutely.
Okay.
Because the house that you're going to fall in love with, that you're going to be more willing to sacrifice for, is going to be the one that you don't settle for. When you have to settle because you're trying to marry the rate instead of the house, you're not going to want to sacrifice a few on-the-go meals or evenings out to pay for that extra payment that it may cost you to get that house that you want because you had to settle for it.
Right.
I mean, just think about other things that you want in life. I mean, if there's a certain fashion trend or something going on or whatever, and you want it, what do? You sacrifice other things to be able to afford to get it.
Right.
And
but I think it's this though. Everybody keeps saying, the rates have never been this high. But what happened in 2008? Because rates back in 2008 were 6.03. You were writing loans in 2008.
Absolutely.
So is there any difference? I mean, are people still buying?
They were still buying. Most certainly were still buying. That was actually during a crisis time in the mortgage industry where a lot of lenders that were on the broker side had to decide whether or not they were going to stay on the broker side or if they were going to become correspondent because they were changing on how the fees that we were able to charge could be, because you had some of these lenders out there. People complain about closing costs now. Closing costs in 2008, 2009, I mean, we had lenders out there were charging 5% origination.
Right.
Now we try and charge 1%, and they're like,
what's that?
It?
Right.
What is this?
That's right.
What is this?
That's right. So, and when you say broker, can you explain that in this business? A lot of people don't understand. Broker, in-house, bank, you know what I'm talking about? Is that what you were just mentioning?
So you're going to have your banks that's going to have a lot of their own programs that they have because they service those types of loans. So they can basically take any loan and structure it however they want it. So say they want to offer 100% financing with no PMI, because there are some banks out there.
Right.
But with that, you're going to have cost, you're going to have fees, you're going to have other things that they are compensating themselves for because of the risk that they're taking. So you could find 100% financing loan. Well, at least I know a year ago you could. I haven't checked recently.
No, not recently, because everybody's talking about all this grant money and all this stuff. That's how it becomes 100%, but go ahead.
Yeah, there's risk that goes into that whenever a loan is not insured. So they take on that, and it's only going to be a certain percentage of those loans that they're going to offer too, because if they had their whole book of service with all these loans with no PMI, they'd be probably out of business pretty quick.
Yeah.
Especially in a situation like we were in 2007, 2008, where a lot of those properties were foreclosed upon because a lot of those properties weren't able to recoup the value.
You just hit the nail on the head because of the foreclosures we had in 2008. We don't really have as strong of that. That's where the red flag was in 2008. Most people have equity in their home now. And so they can sell because why? Because the price is still up. Just so you know, we're still in a seller's market. Would you agree with that?
Somewhat, I believe, but I think it's more of a buyer's. simply because they're controlling what they're able to spend because they're focusing so much on the interest rate.
Well, I think that's right. It is. I'm going to tell you something. It's a seller's market still. I'm going to give you. I love this that I found. It said, and we're going to talk about Denham Springs, right where we're sitting at, looking at each other, talking. All right. Okay. So the Denham Springs housing market trend in 2023 was down 4.8%. It was down. Last year, this time, we sold 3,261 homes. This year, January, with 1,978 homes. Yeah. So see, we're off. So I mean, it's still a seller's market. You know, they can put they can't overprice their houses like they did last year. Because I just gave you the numbers. That's pretty strong. 3,200 last year, 1,900 this year. Huge difference.
Well, I think that's coming to a hard realization to a lot of sellers too right now, is that they can't name their price. And I think that's why I was leaning more towards that it was a buyer's market, because they really are controlling a lot of what's selling right now.
But what if they tell me what you would tell a buyer today? Would you tell them to wait to buy, or is it a good time to buy? Everybody has that. Everybody asks me that right now.
Every time is a good time to buy.
That's right.
If you're finding the home that you truly are in love with. Mm-hmm. Because you shouldn't be settling for a mediocre home in a mediocre neighborhood or mediocre area just because that's the sales price that you qualify for. You need to have a payment set that you know that you want to pay and structure it more around that than worrying about the interest rate. The average life of a loan before someone buys, sells, or refinances is 3 to 5 years. I knew you were going to say, I was going to say 4.2, but go ahead. So it's 3 to 5 years. And I mean, I'm not to say I'm the best in my industry, but I've been doing this for 26 years. There's patterns and there's things that you look for.
If you've been doing this 26 years, I'm going to say you know your shit, but go ahead.
I try. Stuff changes every day, all day long, and it's trying to keep up with all the different regulations and things that are coming through. And with us in what we do, we try and educate them. And to get back to your previous question where we were talking about the difference in the banks and the loans that they have, and say a correspondent lender and a broker, is we're a broker. So basically, like you can go to, say, a GMFS and you can get a certain program at a certain rate. Well, because I'm a broker, I get the wholesale end of that. So you going to just straight GMFS versus coming to me where I can shop you across the board of 12 different lenders that I'm affiliated with, I have a better chance of finding you a rate than what, say,
that could be a better deal.
GMFS or another lender out there could on the correspondent side or retail side, right. Basically because they only have a specific set of programs and their rates are set because they're set based off of the employees they have, the staff they have.
Because it's in-house.
Correct.
Because they're keeping the loan.
Well, not necessarily keeping it.
Most of them do, though.
Depending on what type of loan it is and where you're at, because then it becomes a servicing issue on whether or not they can keep it on their books or not. But that's a whole other level for another day.
Well, yeah.
But yeah, most if you do, but I have had somebody yesterday message me and they're like, "Oh, I thought I was staying with my lender. I called and got my PMI removed, and they sold my loan." They didn't sell your loan. Your servicing transferred because the liability changed that came along with the loan that you previously did, and so it pushed it to a different risk. And they're only allowed to have so many of a certain factor of loans in their
pipeline.
Their pipeline. Their little wheel that has their percentages of what they can have of each type of loan. They have that certain level of loans that they can keep in their pipeline at one time because of the different risk. Because
they just have to unload them so they can fit more. Is that what it is?
Fit more to take on that risk. Because if you, just think if you have a high risk of loans, then what does that do to your ratios? Well, it's not necessarily that you don't want to keep them, is you don't want to not be able to offer certain programs to certain people that carry those same risks, because then you limit the amount of loans that you can take in if you can't offer those programs anymore.
Mm-hmm. Well, you know what I heard? I heard that there's a nice big program out for VA, for veterans. Is that true?
There is.
Okay, so listen, I think it's a win-win-win situation. I think the buyer gets the house at the right price because houses aren't overpriced. It's at market value.
Mm-hmm.
All right. The seller is assisting buyers in closing costs. That's another win.
Absolutely.
And then the other win for the buyer is going to be refinancing in about a year and a half, right?
Absolutely. And if they're doing a VA loan, an RD loan, or an FHA loan, you can do what's called a streamline in a year.
Right, that's
where
right.
you don't have to necessarily have an appraisal all over again. You don't have to prepare all the paperwork that you had to have when you purchased your home all over again.
So there's not big closing costs in that either.
Most oftentimes, if during a streamlined process you have to come up with any money, it may possibly be the payment that you would have had to pay that month that you're bringing to closing, but you would have been paying that money anyway.
Right.
And if you're saving yourself money and all you're doing is having to come up with your payment at closing, it's a win-win for you.
Well, that's what I keep trying to explain to everybody. Everybody's just focused on rates right now, and it's not about the rate. It's about getting that house at the right price, and then that seller's going to help you. And then you can refi in the next year or so. Because in the next 2 to 5 years, the house you buy now is going to be increased, guess what? Minimum 10% to 18%. So the cost of the home is going to do what? Go up.
It's going to go up.
It's going to go up. So long as, and sellers are still selling, and they're not overselling. They're not like it.
Let's just say hypothetically. Let's just say hypothetically that property values don't go up.
Okay.
Say they go down.
Mm-hmm.
You know who's more protected? Those people with the government loans versus those that have conventional loans. Do you want to know why?
Why?
Because they can do that streamline refinance that we just
talked about.
And not have to have an appraisal again. So it goes off of your sales price. So there's not going to be an appraisal again. And as long as you don't go over your original loan amount,
which you shouldn't.
It's a win-win.
Well, yeah, because then they just refine their balance.
Exactly.
Okay.
And with VA and FHA, what are those two loans?
Government.
And they're assumable. RD isn't, but FHA and VA is. So say rates continue to go up and your property value increases.
Well, your property value is going to increase. No ifs, ands, or buts. It's going to increase.
Well, however, okay, so it increases, but rates continue to go up.
Okay.
And I have a VA loan, you have an FHA loan, and someone's interested in buying my property and they have some money down. They were originally looking at conventional, but guess what?
They can
Rates conventional has gone up in, let's just say, 8-9%, which is what we've seen in, gosh, when was that?
1985.
No.
Well, it was a long time ago. I can promise you.
In 98, 2000, they were in 7/8, somewhere up in there.
And in the 80s, they were in the 12s to 16s. So
yeah, absolutely.
I don't know why people are panicking. That's why I don't understand.
But so again, let's look at that hypothetical situation where you have the FHA and I have the VA, and they have someone else trying to sell their house, and theirs is conventional, and rates are 8-9%. But when you purchased FHA, you had a 6%. Let's just say average of what rates are right now, and I had a 5.5.
Right.
Well, I have the VA loan, right? So only a veteran can assume mine.
Correct.
But FHA, anybody who can qualify for that FHA can assume it. And so now it comes down to they can take their down payment and they can pay me for my equity that I have.
Right.
If I have that FHA loan, as well as pay me for assuming my rate. So I have two pluses to my house and selling it in the future.
I think a lot of people forget about. I think a lot of agents and other people. I think they just forget about that, the assumable end of it. But let me ask you something. We were talking about FHA, VA. Okay, so, but what if? I mean, does it have to be the same lender? That's what I'm trying to understand. Say I want to sell 123 Mickey Mouse Street. Mm-hmm. We put it up for sale, and the lender is Chase Bank. We'll just use that. Does the next buyer have to be a Chase Bank buyer to assume that loan?
Yes.
That's what I thought.
Yes.
Okay. So I'm not crazy about that part of it. So maybe the good thing is, because I have a house I need to list coming up soon, and they're with GMFS, and the rate is like 3.25. It's like crazy stupid. Mm-hmm. So you're saying you got to find a GMFS buyer, and then it can be assumed.
Well, they don't necessarily have to be a GMFS buyer, because they're not going to go to the lender. They're going to negotiate that with whoever the seller is, and they're going to start that negotiations with their mortgage company.
Okay.
So they're not necessarily going to comply, and then they're going to put them through the process of what they need to do to qualify for that. And most lenders probably don't want that to get out, because then that takes us out of the equation. But
I just thought it was crazy. I thought assumable is assumable,
No, at the same sense, no, because you still have to be able to qualify for the loan, but you're going to be assuming it at whatever the current buyer basically has left.
Okay.
So, and then whatever you negotiate as far as paying them for their equity and so forth and so on. But a lot of people don't like to educate their buyers in what all that stuff means. But
you have to time out. You have to educate. That's why there's a lot of agents, thank you, falling off and letting their license go. Mm-hmm. Everybody got in this business, and now I'm speaking from the realtor end of it. Okay, got in this business 2 years ago because it was like, ooh, I can get rich quick.
Yeah,
and now. Like, I'm licensed here in Louisiana, and I'm licensed in Mississippi, and there's been a humongous drop in Mississippi of licensed agents that just dropped from the tree, because now you go back to the grind, all right? You've got to go back to the grind. It's the old school. It's the consistency. It's the emailing. It's the texting. It's the open house. It's going back to the old school way, and you got to know your products. And that's why it's good to have a lender. That's why you're on here, because, there's so many different products. That's not my lane. I don't want to get in that lane, but I need to be hooked up with a lender like yourself that has these different products that can make things work today to get people's mind off of the rate.
Well, and the way that I think about it, too, is where I was saying, a lot of lenders don't want someone to necessarily assume it. It's about helping them be able to buy the home that they do want to marry right now, and only date the rate, because there still are other pros to the fact that the con everybody is seeing right now and thinking that interest rates are just so high and that they can't buy right now. There's so many pluses to it, and in educating our buyers and letting them know of those different things up front, we're establishing relationships. Which
that's what this business is all about. If you don't have relationships, you're not going to make it.
Exactly. And that's why not many people have been here 25, 26 years in this industry. And they're
looking at transactions.
Exactly. It's not here for quick money. It's all about the return. And if I can't get that return business for the agent that I'm working with, or the return business from the buyer that I'm working with, or the seller that I'm working with, then what am I doing it for? For us, it's not just about a number. I mean, yeah, we all want to make money, but it's more about building that relationship to aid us in getting more business than us just trying to make the most that we can make off that loan.
Well, we also have to stay on top of today's market. Absolutely. That's one thing that I do. People ask, what are the trends? What's really going on? What taxes are coming? What taxes are going? I'm like, oh my God, just to keep up with everything is just... It's really, really nuts. But what do you see? This is another thing real quick. I have a lot of investors that I deal with. And now I'm seeing investors take out HELOCs to pay cash for properties. Do you do HELOC loans?
We do HELOC loans.
Boom. Okay, well, good. Because you know what? That's what's happening. I have a closing Monday and have another closing next week from the buyer wants to tell you it's cash, but then when you get to digging into it, because I do a lot of representing of sellers, when you start really digging into it, it's like, oh, they did a HELOC loan because no appraisal needed, no this, no this, no that. And other people are leveraging. That's what they're doing now to make their portfolio bigger, to get into what they call the landlord, we'll call it that portfolio, or just to fix and flip. A lot of them are doing buy and hold. Some of them are doing fix and flips.
Yep, fix and flips. And the whole thing about that, too, is a lot of your investors know that you don't ever really truly own your home. So you have all these people that just want to hurry and pay off their house. Because they don't want a house note. Well, you're always going to have to pay homeowners insurance. If you have flood insurance, you're always going to have to pay that.
Right. And
you're always going to have to pay taxes.
And that's always going to go up.
So do you ever really own your home? And so where a lot of people who weren't able when they were younger possibly to have an investment to set up for their future, a lot of people, because of what the stock market's doing all day, every day, because of all the things going on in the United States altogether right now, they started looking for other options of ways to invest and provide for their futures and their families' futures. And so But
what people don't realize, it's real estate. The best way to get return on your money right now, I know, I've got stocks. I talked to my stockbroker yesterday. I was outside just pacing, going, oh, Lord, what am I doing? Yeah. But I know to invest in real estate, which it's best return on your money. But look, I got two sponsors at this podcast. One of them is Casa Maria. Casa Maria is down here in Watson on Highway 16. And I want to take, you ever been to Casa Maria?
Oh, yeah.
Just a few times.
May or may not go there a couple times.
Well, Casa Maria has $2 taco on Tuesday. They have $18 pitchers of margaritas on Wednesday. And then, $18 pitchers on Tuesday and half price on Wednesday margaritas. You want to go drink? No, you don't?
Maybe.
Okay. Well, you ever been to Casa Maria? Yes, you have, because you know what, Fahim, we're giving you a good shout out here today. You was his lender, so let's go ahead. Let's just go ahead and tell everybody you was his lender. I was his agent. But look, Casa Maria has great. He's a great community guy too. I'm glad
he does do a lot for the community.
He does, and I'm glad he's one of my sponsors here on the Dirt, Grit, and Stupid Shit podcast. And so listen, y'all get down there to Highway. It's on Highway 16 down there in Watson, and go see. Go give a little shout out to Fahim, and I guess we'll say Mary Claire too.
Yeah, can't leave out Mary Claire.
That's right. So tell me, what are you seeing any craziness going on right now in the mortgage business? Like somebody fills out an application and you try to reach them and they just ghosted your ass.
Yes.
Okay, I just want to make sure I wasn't crazy.
Now, and then just once we do get them and we get the signed contract, I've always practiced as soon as I get them pre-approved or pre-qualified, as I like to say, because they're not really pre-approved until you have all those documents, is they'll start sending you some of the documents, and then they'll be like, well, I have to get home and get the rest of it off my computer, and I'll send it to you. And it's like pulling teeth. And then some of these, the pre-qual and pre-approval happens pretty much in the same day because houses are going so fast. And it's like, I need these docs. I need these docs.
And see what you just said, houses are going so fast. It's still a seller's market. It's a great time for a buyer to buy, but it's still a seller's market because if it's priced right, that's what we talked about, fair market value, it's got to be priced right. I'm telling you, before I could sell a house in 48 hours. Now it is taking me an average of 12 to 21 days to get that house under contract, believe it or not, as long as it's priced right.
Absolutely.
As long as it's priced right. It's priced right, it will go bye-bye. I can promise you. But you seeing some ghosting going on, disappearing from the buyer?
Well, that, and then I've had a couple buyers in the past month or so that they were past clients that I did refinances for. I had two recently, and just one of them situation is this person had to sell their home, and so they had already found the home that they wanted to buy, and it took them about 3 weeks for them to be able to find a buyer for their house, which is about average, I guess, just depending on the area and the market. And I got all of his stuff. I mean, I had everything on him. I mean, I had him apped. I was just waiting to order title because you don't want to order that too soon because after 30 days you have to do a new abstract. So I reached out to the agent, you know, and I was like, you know, just trying to make sure that we're selecting the right title company because a lot of times when you have a seller and a buyer trying to close on the same time, you want to try and have the same title company. That way they're not trying to run to two places in one day. And she says, you know, that he got a better offer somewhere else. And I said,
"What you mean get a better offer? He just left?"
Well, he had just called me. So I wasn't aware that he was even entertaining another lender at this time. And so I call him back and he's like, yeah, such and such with ABC offered me this. And I was like, okay. I said, well, I don't know how they're getting you that. I said, but as your friend and you being a past client, I said, send me over the loan estimate. I'll be happy to look at it for you. And if it's something that I can match, because again, I have 12 different investors. It's not that I wasn't trying to get him the best thing. It's if I'm going to offer somebody something lower that I didn't offer Joe before,
you got to see it.
I've got to be able to show a potential auditor that comes in looking at my files and says, okay, well, you just did this same loan for Joe, and now Jane's over here with the same loan at the same time, and rates haven't changed, and why are they getting this rate that you didn't give Joe?
Because they're looking for, from the auditing, they're looking for consistency from you too.
Or if I reduced my cost for Joe, but I didn't do it for Jane, why did I do it?
So long as you got a copy, that's right. So long as you got a copy of that LE that they've given you to compare to, then you can shop it in case you're ever audited. Are you buyers listening out there today?
And I can also go to my investor that I'm looking at for my potential buyer with this and say, hey, this is what they're getting offered. Can you match it? And 9 times out of 10, you want to know what they say?
What?
Hell yeah.
But at least you've got record.
Yes.
See, okay, so Tiffany, this is a really good thing because I never knew this. What you just said makes a lot of sense because we're licensed in this state.
Yes.
And it's huge to hold a license in this state with the commissioner.
Yes.
And then if anything can go bad, I mean, shit can hit the fan good. You know, it seems like in our business. So that's a good point. So I don't know if everybody was listening again, but what she said was if you can bring if you're shopping lenders and you've got it in writing from another person, from the other lender, and she's going to show it to your investors, 12 or 15, however many you got.
Yeah.
You just got to have a copy to keep that on record in case you're ever audited.
Correct. As to why we reduced a rate or reduced a fee for Joe and not Jane.
Right.
So that's where I was. And so I asked him, I said, you know, well, he's like, oh, I'm getting this rate with no origination. And I was like, well, number one, I want to see that. But number two, I mean, let me look at it and make sure, even if you don't go with me and you go with the other lender, that is truly what the paperwork says.
Yeah, because the cost could be hidden on the back end, huh?
Absolutely. And so this was on a Wednesday. And so I message him and I'm like, did you get it yet? Did you get it yet? Didn't hear from him. So that Monday comes around. And so I was like, hey, you know, I just talked to your agent. She won't even tell me who the title company is. You're closing in less than 21 days now. What are we doing? And so he finally sent over the loan estimate to me.
Oh God.
It was not no origination. There
was hidden fees on the back end?
It was $4,700. And that he was being charged. And so I went to my investor and I said, hey,
here it is, black and white.
This broker's going through the same lender I'm looking at, same investor that I have.
Oh wow.
How did he do this? And so I figured out we ended up figuring out what they did, and you know, and
you was able to meet it.
Oh, I was able to beat it by $1,000, but
oh wow!
In me doing that, the other agent had already informed the buyer that he needed to move forward. It didn't act in the best interest for the buyer, and I lost that deal. But to me, I at least know that I educated him on what it was, because it was hidden things, and there often are things that people offer, and it's not really what it seems. And so even if it's just to get a second opinion on it, not to say that your agent isn't educated in that realm of it, but sometimes it's okay to they don't have to pull your credit just to look at your loan estimate for you to make sure that you're getting what the lender is saying that they're offering to you.
Right.
So just
and
be,
that's what
be
everybody,
cautious of that.
That's what everybody thinks. You call a lender, they're going to pull your credit. Not necessarily, because doesn't that cost money too?
Oh, yeah. That costs money. And so what?
I don't think if people just don't get it, they don't. They think it's, I wish they would quit thinking it's like shopping for cars, because it's not, But you're right. LE is going to determine on which lender you go with. But if the agent can educate, if an agent can educate somebody, I can promise you they're with a good lender that's going to finish educating them. I'm not going to get in your lane, right?
Yeah.
I understand a little bit of it, but I can't keep up with it. So much shit changes, which it does.
It changes all day, every day. Rates change sometimes 3-4 times.
Got a lot of good things going on for the veteran loans right now. It's crazy.
Yep, there's a lot of good things coming out for VA and FHA. We can schedule another day to go over those two and all the changes in those programs. But it's some good stuff coming. Yeah.
And that's good. And I think by the end, it's just me, but in 2023, we will see the rates go down, probably closer to that third quarter, maybe closer to the end of the year. And I think it's going to go back to the 5.5, between 5 and 6. What you think? No?
No.
Why you say that?
Because I think that...
It says it right here.
Where'd you get that? The internet? Because everything on the internet's right?
No, you should turn the TV off. No, this is statistics from NAR, from National Association of Realtors. So they were just saying that the interest rates in 2 years should be around 5.5 to 6. Okay, so I'm thinking by the end of this year we're going to see interest rates go down. That's my opinion. You say no, I say yes. See, that's why we have opinions. But
yeah, absolutely. I mean, we're all entitled to our opinions. I just strongly believe that what happened and what we all got comfortable with was rates being as low as they were for so long. Mm-hmm. And what wasn't taken into consideration is, even though that you had a buyer that could qualify based off their income for a certain amount of house, those buyers weren't educated in the maintenance and the potential escrow increases, like we've seen recently with insurance companies going out of business and them having to double up on insurance for 1 year and then not educating on them if they get an insurance refund, for them to put that back into their escrow, how important your escrow is, that just because the servicing of your loan changes, that's not the reason your payment went up. Your payment went up because something happened with your escrow.
Which is normally insurance.
Exactly.
Sometimes
are your taxes.
But most of the time right now, we've all been experiencing insurance. I mean, we love our insurance companies, that are here. But I mean, that's what we're experiencing. But
you don't have to keep the same insurance company. I mean, just because there wasn't a whole bunch available last year for rewriting because there were so many that were going out of business. If you do see an increase happen in your escrow with your insurance, it's okay to shop around. Most oftentimes, you're with an insurance carrier that is just like me. They're a broker. They can shop you through several different companies within their one company, and there are companies out there like that. So just be aware that is available to you and that you can do that, and just make sure that you have the right coverage too. Because never wants you to be in a situation where your house isn't covered. And
I don't really want to get into the insurance thing of it, but some of these insurance companies are making you have a minimum coverage that the house is not even worth that. I'm experiencing that right now, by the way. Just so you know, when that's another day, another topic, but I'm just telling you, I've never seen that.
Because it goes off of cost of square footage.
And it goes off of replacement.
Yes. If
it was to burn to the ground. But, what was it? A year and a half ago, you'd ride by a big old 18-wheeler full of lumber, and you go, look, there goes $1 million, and now it's not that way. Prices have come down, and all that. So, look, I got another little sponsor here. It's called Southern Rhythm Venue and Entertainment. They're down here in Dental Springs on 16 also. You ever been there?
Yeah, but they're in St. Helena.
I know. Well, I know it's in Slane, but they have a Denham Springs address. But it's past Casa Maria on 16. I'll tell you that much. But I tell you what, they take pride in their. They have it's clean. It's just so super clean. It's big. It's smoke free. I mean, the girls' bathroom has so many amenities. I can't even mention them because it's just nice.
I mean, I could go in there and flat iron my hair if I wanted to. If I wanted to change halfway through the night and want to curl it, I could do that.
It's all in there.
I know.
It's service. They have some service. And then for the smokers and everybody out back, even if it's warm, I mean, if it's cold, they've got fireplaces out back. And it's all fenced in. And then I like the idea, and I always say this every time on these episodes, I guess because it's just important to me, but a lot of women will, go have a bachelorette party or a girls' night out. And I like how he's got security guards that will walk you to the car. Mm-hmm. Married, not married, doesn't matter, just to make sure that all the women are good to go. But yeah, y'all need to get down to Southern Rhythm and Venue Entertainment down here on 16, right past Casa Maria down there in St. Helena Parish. Okay, all right. So we were talking about you being ghosted, because I've been ghosted right now. I think buyers get cold feet, right?
Yep.
Why would they get cold feet right now? What do you think that is? Is it the rate? Is it people not educating them? What is it?
They're not marrying the house. Right. They weren't truly in love with the house. They were focusing more on their rate, which made them focus more on their payment, which limited them on what house they could actually get versus what they qualified for.
And I'm hearing about buy down your rate. Mm-hmm. And I don't know, like I said, I'm trying to stay in my lane, but there's so many lenders that advise this, but I don't think it's any good to buy down your rate right now when you should just wait for that rate to go down.
Well, it depends. If it is going to be truly your forever home, and it's something that you know that you're going to be in for the rest of your life, then
buy it down.
Buy it down, because
that's different. Yeah.
Because what's going to happen is it could be a lot less for you to just pay to buy down your rate, or pay a discount point to buy down your rate right now, versus you having to refinance and pay that additional cost to do it later, especially if it's a conventional loan. Because what's going to happen is you're going to have, typically if you're, say you're saving yourself $70 and it costs you $1,500 to get that extra $70 that you're saving. Okay. So what you're going to do is you're going to take that amount that it costs and you're going to divide it by your monthly savings. If you can recoup your money within the first 2 to 3 years, then it's worthwhile you to do it now. Right. If it isn't, then don't. I mean, if it's going to cost you $3,000-$4,000, don't do it.
That's what I'm seeing. Because I'm seeing 4,000, 5,000, and 6,000 people spending to buy the rate down.
Yeah. Depending on whether or not if it's your forever home, would be dependent upon whether or not that would be a smart thing to do. But some of them might just be qualifying too.
No, I've got some really good, solid buyers right now, and they're wanting to buy the rate down. I mean, they got scores in the 8s, in the high 7s, and I'm not understanding. I keep telling them, don't do that right now. Just let the rates go down.
Guess just as an agent.
And they're in love. Look, they're in love with the house. Let me correct that too.
I can promise you. From a lender standpoint, as you as the agent, this is just my opinion. And I'm not trying to step on anybody's toes. But I think that some of our agents need to get back to focusing more on the buyer and the buyer's needs and making them fall in love with that house instead of the lending side.
Stay out your lane. Yes. That's what I do. And I give people the option. I mean, it happened. It was finalized this morning before I walked in here and did this podcast. My buyer picked somebody different,
Do your homework. I mean, make sure it's a good, reputable company. You want to make sure that, definitely that your clients are not being taken advantage of. But to get to a point where you're quoting rates, payments, and quoting certain terminologies in the mortgage industry. Like I had a poor little girl the other day, first-time home buyer, and she kept over and over again. She's like, Miss Tiffany, I just don't, and I was helping my partner. She said, Miss Tiffany, I just don't understand. If the seller's paying $2,500 of my closing cost, and my closing cost is 3.5% of my of my sales price on my house, that's $3,125. Then why am I having to come up with $4,000? I said,
Oh
well,
my God.
your closing cost and your down payment are two different things. She didn't understand that. She said, well, my agent told me that it should cover my 3.5%. And I said, well, I don't want to. Again, this wasn't my client. This wasn't my client. This wasn't my client. And I said, I don't want to speak on your agent's behalf. I don't want to speak on your loan officer's behalf. I just want to speak on my knowledge. I said, but generally, an agent doesn't talk or discuss that part. They want to know what your closing cost is, but they don't go as far as to letting you know what's your down payment and what's your closing cost.
No.
I said, I can't speak for you, can't speak for your agent, can't speak for the loan officer that's not here. I'm just assisting. I said, but in my opinion, it should have been explained to you this way because this is what it truly is. And so she was able to finally, grasp that and understand it, but she was really confused. And so sometimes that can be a factor on whether or not a client ghosts you because they get too overwhelmed because they have this person telling them one thing, this person telling them something, and then they got mom and dad and Uncle George over here telling them something. Or
boyfriend or girlfriend. There's always
what happened when they bought their house.
But see, that's the problem with today.
Yeah.
That's the problem today. There's too many people that get involved. Mommy, daddy, brother, mothers, all of them have an opinion. Everybody got an opinion like they got an asshole. I'm just going to say it, okay? It's this simple. Let the buyer communicate with the agent on the home. Let the buyer communicate with the lender.
And
let the lender educate the buyer.
And if we can do that, I think then maybe we can have more buyers that are actually falling in love with their house and they're not settling because there was only 4 houses in their price range that they qualify for, and so they had to make a decision on one of those.
Well, sometimes that does happen. Right now the average price range, believe it or not, in Denham Springs is running right now that's going like this between 205 and 215. Just boom, boom, boom. It's going. It doesn't sit on the market very long. And then when you got something under 185, that's getting a little difficult. But those 350 to 450, they're taking longer to sell. It's because the buying power of the buyer has gone down because what? Of course, the rate's up, but then they need to be explained how they can afford this house because all they got to do is fall in love with it, right?
Yeah.
That's what we've been saying this whole time. Date the rate and marry
the house.
The house. All right. All right, Tiffany, I want to thank you for coming on here.
Thank you for having me.
It was a good little episode. Hopefully people understand to date the rate and marry the house. All right, y'all.
Absolutely.
We'll talk to y'all later.
Bye-bye.